Good turnaround Tuesday, everybody. Hello, Sir Ravanan. Welcome to F.A.C.E. Nice to meet you. Alexander, Bran. Guys are looking to buy Aussie. Hello, Mike. All right. So, got the team here.
Morning, Dale.
Good
Morning,
Dale.
morning, guys. So, dollar weakness once again, especially in cable. So, what lit it up? Ryan?
No idea. Cable's
No
out
idea.
on its own.
Okay. All right.
Flying away.
Okay. Basically, dollar at new lows. Your favorite charts here, Brian? Brian, let's see, the 15-minute. I saw something developing here. See the euro?
Yeah.
On the 15. So this looks like 1, looks like 2, and maybe we get a 3 up here. But we're, cutting through that 103.50 level right at the 200-day. Think it's worth a shot on a turnaround Tuesday?
What, to run higher?
No, to fade it.
Yeah, I don't know. We had this 103, 40, 50, 60 area on the 15-minute that we hit that big zone you've got on your chart just there, and it took long enough to break, and then when it did break, it hasn't looked back. There's no stopping at the moment.
Yeah.
Cable, euro, dollar,
yields
dollar, yields at the moment
are trying to break down.
Yeah, we've been watching that. We were watching those 10s on the flow show. It had a little nibble under 3.8. That looks to be the big line in the sand at the moment. If that goes, dollar yen is likely to follow, and I think dollar yen's just being held up with that not going. But if you look at 20s and 30s, they've both broken the recent lows. You look at them on a 15-minute chart. But then you look at the 2-year yield, the US 2-year, and it's still holding that rate ceiling expectation levels, 2.34%, 4.3435, around that 4.5% mark. It's holding. So there's moves in yield, but you look at one like the 10s, it's not breaking lower. You look at the 2s, it's keeping the Fed's dots in play. You look at 10s and 30s, that's showing something different. There's different pictures all over the place.
Okay. Risk on after a pretty negative close yesterday, just open steady and still looks like it wants, 200-day, this trend line. And this trend line goes all the way back to the highs. Okay. And it's going to come in right around here. 41.40. So that's still another 150 handles away. Expectations for the number, Kman?
Expectations for the number. The last few months came in around what the market expected, just like tiny bits and pieces, but we've been gradually coming off. So I'm gonna go for the 8.3 expected, another slice off another 0.2% or so. But it's blind darts in a way. I think to reply to what you asked about the cable, I think the market still looking a bit positive towards the cuts in spending and stuff. Yeah. But I think we could get like a real big move on Thursday on the budget when if they fail to really because there's a few rumors they may push those cuts a bit further out. I'm starting.
It's hard to push austerity on a population in a recession.
Yeah,
exactly.
Why have they managed to push austerity?
Also,
okay, Steve. I know. The last time we had austerity was after the American Civil War.
Right? Something that's the problem, and that's why the fiscal situation is completely out of hand, because when the economy is performing well, although you can put several asterisks in performing well. We've explained before the fallacy of thinking that an economy that bases its activity on consumption, mostly on credit, is a well-performing economy. But let's bypass that. So when things are well, still nobody wants to actually do something to put the balance in check. And then when things don't go well, everybody's like, oh, come on, we're not going to try to put things in balance now that we actually need stimulus, right? So basically, even the most fanatic Keynesians until 10 years ago, if you ask them, they were all for, something, the spending should be stimulating during bad times, and during good times, you should be more frugal and put some on the side for the bad times. But we've switched to we have big deficits when things are good, and enormous deficits when things are not good.
I'd like to ask the whole crew here, have you guys ever told your wives that you're going to bring austerity into the family?
I've only just let the wife put the heating on, Dale.
Just curious.
My wife calls the shots anyway, so.
Well,
my wife calls the
shots. I bet. Right? She's austere anyway. All right, so gold made a new high for the move, Stel.
Yep, I mean, gold and silver are underperforming today. You see platinum and palladium doing a lot better. I still think that there is profit taking, and Kman showed the chart on silver on the flow shows today, and there is a zone between like 22.20 or something like that where it is resistance. So plus there's a moving average. There you go. Let's say what is it, 200 weekly? Is it? I can't remember. There's a lot of confluence here, which and given that silver has outperformed pretty much all the other metals over the past week or so, it makes sense that there is profit taking. I think as long as yields don't start, screaming higher, I think that gold and silver are going to follow through higher. But obviously, we still wait to see what happens with the Fed. We had Lael Brainard talking about slower rate increases going forward. And we
already knew that, Stel, though.
Yeah, that's what I
the
was
market
say.
was. Yeah,
exactly. Yeah, I mean, the wording was very normal and very, as pretty much we knew, but still, she's there talking about it, and the market likes it, But obviously, the thing to wait for is to hear Powell speak, the big cheese, but. The market's gone ahead of itself at believing that the pivot is coming closer. I think it is, but I want to see confirmation from Powell before I can say, yep, this is it.
Well, I think this is a very important chart for precious metal heads. So, if I covered up the title, and because my bias is for the ratio to continue to narrow right towards the mean longer term, but when I look at this as a falling wedge, and I have to be open to, and we're starting to see it a little bit, silver's underperformance. If we break out over 85, we're going to 96. I'm not saying that's going to be directional, where it's means silver's going to crash, but it could mean a period of underperformance for a while. I don't know what the reason would be, unless it's just, maybe some economic weakness starts to come in. I've heard people talk, everyone loves that the dollar is weaker because it gives a lift to everything. The wrecking ball has been cut off, and now it's just a chain swinging around. But it could be also a sign of some economic weakness, and perhaps maybe a growth scare down the road in a month or two. Which isn't so bullish, right? It isn't so bullish risk.
Dale, people seem to forget that there is one more thing that weak dollar stimulates.
Inflation.
Exactly.
Yeah, at least
And
nominally on everything, right?
we're talking about a country that runs huge trade deficits.
Yeah.
So the strength of the dollar, in essence, has put so far a lead to inflation, right? I mean, it
yeah.
kept it was it was it was a force that in essence kept inflation from going to double digits. Imagine
Yeah,
if the dollar
like Germany because of the weak euro. Is that part of the reason the Europeans had such sharply higher inflation numbers was because of
there's no
currency?
better example to look than the UK, right? The UK went
Okay.
above 10%. Why? Because among other things, the pound was weakening at the same
Yeah.
time, right? And of course, Powell is fully aware of that. So, I've said since the beginning of this dollar sell-off that, in my opinion, this has more days that it can run. So I do think that playing, in the rather short term, these dollar weakness and equity strength is a good idea because it seems like it's going to have follow through. But my prediction is that Powell is going to disappoint the markets again because yes, the Fed is going to start slowing the pace of hiking, which is something we already knew, right? I mean, we know that it wouldn't be easy for them to go above like 5.5% of rates eventually, right? And of course, it's not that they're going to hike their way to their terminal rate by 75 basis points each time. Obviously, there's going to be a slowdown as we're getting to the end of the rate hike cycle. But the market seems to disregard a few of his comments, which were very important. One, he explicitly said that they want, which is correct, by the way, they want real rates to be
Above.
positive, which means that, yes, I don't think they're going to be hiking until rates are above inflation, but I think they're going to hike to wherever they hike, 5.25, 5.50, I guess somewhere there. And then wait until inflation crosses below that rate and then wait a little bit longer. At least that's the plan he communicated. Now, if they're going to end up going, going through with it and following through, the promise is a different story, right? But for the time being, that's the plan. So I'm pretty sure that Powell is going to disappoint the markets again. Now,
what do you think about
so
this
what?
area
So
right
Steve,
here?
if he's going to disappoint,
you're
if he's
here.
going to disappoint the market, what do you do right now?
I
Should we
said
be
Do you
buying
sell?
dollars?
Do you sell this rally in equities because
I've
the
said it
S&P
before. I think
4,000 and we're at a 618 retracement right now.
I've said it before. I think, Blake, that we have a few more days that this short-term trend can continue and should probably continue. But the closer we get to Powell, then I think the risk reward will definitely switch to taking the other side of the markets.
But I want to know what I do today. So
dollar weakness should continue for a few more days, I think.
Okay,
Blake,
so
did you see that
you're not
line
going to
in
sell.
the Dixie?
You're not going to
Go
sell
ahead.
the S&P right here at the 618 retracement, and you got producer prices coming in today. So are producer prices going to be stronger or weaker than expected?
No, but
Let me
I
ask
don't.
Kreskin.
Yeah.
Kreskin knows.
Huh?
Yeah.
Kreskin. You ever hear the guy? Kreskin?
No.
Okay.
Me neither.
But,
who's the guy?
But okay,
Well,
so here we got producer prices coming in today. And good morning, everybody. We have the
Good
S&P
morning, Blake.
up at the 618 retracement. This is kind of do or die time for the market, isn't it? I mean, everybody's expecting inflation's peaked. So if inflation is peaked and we start seeing, the producer prices come off again today, this is a perfect setup to just continue to sell dollars, right? But how about if producer prices come in, in line with expectations? Do we see a massive reversal here from, this key level? And, you look at the dollar And the dollar's obviously it's come off quite a bit. But look at, I'm going to just show you this really quick. Let me pull this.
I think that if the PPI doesn't really surprise to the upside, Blake, the market is going to shrug it off. Even if PPI comes in line with expectations, 7.2, let's say, I think the market's going to shrug it off, within a few hours, worst case scenario, and it's going to continue where it's going at the moment.
So I'm going to show you this. There's the dollar index, right? As we hit a brief new low. Now, I want to point out a couple of key developments in the FX market. So just bear with me really quick. So you got the dollar index hitting a new trend low. Relative strength is divergent. So that's already, a warning number one. If you're out there buying euros, buying sterling, because the sterling was just ripping higher this morning above 119. If you're buying, if you're selling dollars going into today, there's your first warning, right? Now, again, let's just imagine producer prices come in line. Is that enough to warrant a bit of a bounce in the dollar, because the dollar is probably a little oversold at this point? I'm gonna reiterate something that we talked about yesterday. The Fed, wants to see continuous weaker data in as far as inflation prints go. And we only got one inflation print. That's something that, the whole team here talked about yesterday. Now you take the euro dollar is at the 200-day moving average. So just, think about where we were at last week. Last week we were below parity. Here we are 3%, 3% higher in the euro. Is that warranted by a Fed that may not be changing its rhetoric? So I'm gonna warn people. I think it's you gotta be very careful chasing the euro up here. And Dale, what is today? Is today Monday? No, today is.
You didn't believe in it for years.
What? It's turnaround Tuesday, Dale. I can't believe you haven't even said anything yet.
He said it earlier.
Oh, okay. I'm sorry, I missed it.
He said it at the opening.
Okay,
Anyway,
all right, Dale.
I don't
Dale,
believe in it anymore.
I believe it. Dale, I don't. I believe it, and I believe you. And that's the most important thing. I believe in you, man. Hey, by the way, your headphones on top of your head, just FYI. So the
That's
I believe in you, buddy.
All right.
Thank
you.
It's me. It's me and you
against the world. Yeah. All right.
No, so if you're part of the ForexAnalytix community, this is the resistance zone that we wrote down, or we drew down for the sterling yesterday. So be careful chasing up here. I mean, you're challenging the highs that you saw back here in August. Look at the Aussie dollar, 618 retracement, tagged it, and we've already come off. All right. Kiwi, horizontal resistance. Again, this stuff is we drew this all yesterday with ForexAnalytix. If you're in the community, here's your bias chart. We talked about all of these really key levels coming into view. Take a look at the Swissy. Right into breakout point, right? Breakout point, low, pivot, bouncing like a bat out of hell already. Dollar Mexican peso really still struggling. What's really interesting is look at the dollar Canadian.
Yeah, right there.
Yeah. Previous resistance, previous resistance, previous support. We haven't been able to break down in the last 2 days. And you've had this huge rally in risk that we've seen. So you got to be really, really careful. Now, I'm not going to sit here and say that the dollar can't continue to go, the dollar can't continue to go down. But how about, I think you got to, if you're waiting for today's data, you got to be a little careful. Hey, Ryan and Kman, I didn't hear you guys earlier this morning. You have any expectations from and Stelios too? Do you guys have any expectations with producer prices today?
No, I think you're right. If it comes in line or hotter, you're going to see probably a bit of a rally in the dollar. I think it's going to get smacked hard. The big risk for me remains Powell. He's the key to it all. If he drops a bomb saying that doesn't matter what the CPI was, we're still going to 4.5-5% on rates, that's when you get your big flip around.
Oh, he will.
So
in which case I would personally be selling 10-year US and probably the euro dollar as well.
So
the 10-year is my favorite.
So 10-year, you really want to sell the 10-year up at these levels?
If we do get a hawkish Powell, yes.
Yeah, okay.
Yeah.
Well, how about on today's data? I don't care about Powell. I want today's data. You got to tell me how to make money
Well,
today,
you
Stelios.
you
No, I don't give a
showed-
shit
Yeah,
about
yeah, yeah,
what
you
I don't care about what you think about Powell.
Okay.
You know, weeks from now. I
Maybe
wanna know
I'll give you
today.
some.
Tell me today. Tell me today.
Some sporting tips then. No,
Buy low, sell high.
you showed all these currencies, the dollar pairs. I think they're
Yeah.
all on the brink. Quite a few of them. The Aussie, even the euro dollar, all of them. You know, if you get a good number, a strong number, then you got to be selling those.
It's
I mean,
really
buying dollars against the others. Yeah.
It's very pivotal today, and I
Yeah.
guess the point I was trying to make here is, you know, jokes aside, the point I'm trying to make is we're really up against some key levels here, and I think it is definitely risky if you're chasing the market. I mean, look, we've been, and I'm gonna congratulate the entire ForexAnalytix community is, you know, that's here. You guys can just go through, you know, the trades room, and you can go back go into the trades from last week. Just scroll and scroll and scroll and just look at not me, not Kman, not Ryan. Just look at everybody else that's trading in our community. We have been aggressively shorting the dollar for the last week and a half. And again, you can go into the trades room, the general chat room, the Flownomics room, whatever you want. But inside,
you could even go into the bathroom and find
you can even go in the bathroom and check it out. But I'm gonna say we have been aggressively selling the dollar for the last week, and there, you know, we don't go in straight lines. I hope everybody understands that. You know, we just rallied from the euro literally 350 pips on one piece of data. So just be really careful, and we can continue, of course, but we need to see the data continue to show weakness, which I think it will. I think we will start to see, you know, inflation data weaken. We're going to see employment data worsen, but you have to see it, and the market's going to need it after seeing such an aggressive move. So look, we got 8 minutes until the data comes out. Dale, what are you thinking here?
I was what you talked about. I was showing some things, and I asked Ryan if he thought it might be worth a shot to fade euro today at the 200-day. I did it, you know, risking 65. So we'll see.
I sold it this morning. Yeah, if you're, you know, again, if you're in the, you know, ForexAnalytix chat room, you can go right to, you know, my latest positions, which would be right here. You can see that I shorted some euro at 104.09. So, and that was about an hour ago. So I'm with you, Dale. I'm with you.
I was tempted to short silver, but I went with the euro instead. So
you know, here's the thing: is if we have data coming out in, you know, here we got 8 minutes. You know, I wanted to get in near, you know, seeing all this divergence. I wanted to get in before the data, and because if the data is good, then, you know, I can move my stops, even add to the trade and get a little bit more aggressive, because I wanted to have a little exposure ahead of the news because of the overbought, you know, the overboughtness of the market. But, you know, we come back down through 103, and I'm going to be aggressively adding, you know, for a move back down to 102. You know, I mean, that's all there is to it. Is just you. And then if I end up getting stopped out above the highs because the data is weak, you know, it's not a huge position, and I'm not taking on a lot of risk at this point. So, I mean, you got to pre-position yourselves for these events. So, Kman, what are your thoughts? I know you were talking a little bit earlier, but what are you thinking right now into this data?
Yeah. Well, they asked me where I thought it would come in, so I think we're on a slightly slowing path. So I don't see too much reason for it to change right now, but I also think the market has done quite a bit of unwinding already. So I'm rather in your camp saying that we could see a bit of a correction in the correction, and keep a close eye on 103.50, 40.70, 50.70 on the euro. The 119 30 50s for a starter in the cable, I'd say. But what I'm interested in is dollar yen. In Cable printed a new high. Euro dollar printed a new high. Dollar yen did not print a new low right now because it was a bit overdone, probably around 138.5. So I caught a little knife this morning just to play a correction in that one again, a little bit higher. So
I mean, that's an 800. That's an 800 plus pip move.
Throw it away. Sorry.
That's an 800 plus pip move over the course of the last few days. I mean,
yeah, exactly.
That's incredible, right?
Yeah, it's quite a move, right? So I think there's still, as I said yesterday already, I think we are going to be a bit more in a range play over there for now, on the yen side at least of things.
Yeah. All right. Well. Thanks for that. Ryan, what are you thinking about the pound ahead of this Thursday? Are they going to revive Liz Truss's old plan?
No, they've gone completely the opposite way.
I'm joking.
But I can't see any good news coming for it from the pound. It's all going to be tax cuts, tax hikes, austerity into a recession. I don't know how that's good for the pound, which shows you that this is all dollar move. I mean, you look at euro sterling, it's playing table tennis between 88 and 87. It's not going anywhere.
Well, it could be playing pocket pinball.
Pocket rockets. What?
You guys have played, Dale, you played pocket pinball before, right?
No, that's not
or is it pocket pool? Joking. Bad joke. It's Tuesday morning and I'm tired. So all right.
I remember it though.
Oh, come on. All right. Thank you, Brand. All right. So sorry, go on about the sterling. So
yeah, I was just saying, if you look at euro sterling, it's doing nothing, just between 87 and 88. Maybe a little extension here and there. It's doing nothing.
All right. Well, I'm. Do you chase the sterling up here? I mean, do you chase it up here ahead of Thursday, or what are you going to do?
No, I'll see what happens Thursday. If the dollar's still weak going into the budget thing, and you get a decent dip in cable, that's potentially one to look at for a fade, just to get back on track with what the dollar's doing elsewhere.
Okay. All right. Well, fair enough. Stelius, what are you going to do with precious metals?
Well, I still have my recent silver longs for just above 21. I'm holding on to that. If we do see either good numbers from the US or hawkish Powell, I'm gonna let it go. It's positive. I'm gonna let it go and try and load up again. But you know me, I always want to own some, and
that's a 50% retracement we're holding right here.
Yeah. It is a big zone. Kman talked about it, 22 to 22.20 or somewhere around there. It's a resistance level, and there's a couple of fibs I think as well. I need to look at my charts, but
127% extension from the last leg. Right there.
Yeah, and silver is underperforming today and yesterday, so maybe profit taking. I don't know.
Which is interesting how it was outperforming earlier.
Exactly. So. Maybe that's the reason why it's underperforming this week. You never know, But overall, metals are looking good. But it's all a yield play at the moment. So if yields continue to stay under pressure, I like metals.
All right.
It's as simple as that.
Hey, Steve, we have about a minute. We're up against the 618 retracement that you pointed out. I wasn't even seeing it yesterday, and you pointed it out to me. Thank goodness, because noticing it this morning, I think it is really. Holding the market. So what are your thoughts? Do we stall here at 4,000?
30 seconds is going to be enough to reiterate my position. The market has been very optimistic and wants to play the other side. I trust that the market wants to continue doing that. So I think unless we get some kind of a surprise, very strong PPI, which is going to be a game changer, I think that even a temporary pullback in equities or a temporary rebound in the dollar following the data, if they're in line, for example, is going to find soon more dollar selling, more equity buying. But I think this part is going to be over with Powell. So I think it's going to be short-lived.
Very good. Okay. So thanks, Steve. Oh, shoot. I did not want to do that. Hold on. Let me grab the damn it. Okay, here we go. Sorry, all my stuff just disappeared because I grabbed the whole screen. That's off all 6 on my screen. So there's the data flash. Here's the charts we're going to be looking at, and you have the gold, dollar, S&P right here.
Oh, PPI much weaker.
Yeah, it's weak.
So
Yeah.
the dollar is, so we're going to see a continued dollar move. Wow, look at stocks are just loving it. S&P is well above 4,000.
Of course.
Yep. So let's see if they can continue. What's your read on this, guys?
Impressed by that bounce in euro. Big deal. 10, 20 pips.
My read into it is that it's going to accelerate.
The euro hasn't even been able to take out new highs yet. So,
I think most likely we're going to see the recent moves extend, and it's going to make it even more impressive when we get Powell disappointing the markets. But until that day comes, I think there is going to be a lot more celebrating. You know what I mean?
Yeah, I mean, hey, look, it's and let's all keep in mind that we are really at some pretty critical levels. Here's the euro right back at that 200-day moving average. So let's see if we stall here. I'm gonna see if we can hold it or not. But
I think it's unlikely, Blake. I think the data is is decently strong enough for the market to continue doing what it was doing the past few days.
We'll see. Well, you know what? We're going to be talking about this in 45 minutes on the Morning Edge with all the ForexAnalytix subscribers. If you guys want to learn how to be inside of our community, join us. It's $1 for 10 days to try it out, or you can also join the trader funding program. Just check out the 2-minute video at the very top so you can figure out how to trade our money and not risk your own money and keep 75% of the returns and none of the risk. So check out this video right here on the trader funding program. All right, Dale, it's all yours. And we'll pass it over to you.
Okay. Thank you, team.
Thanks, everyone.
Thanks, Dale.
You still sound a little bit far away.
I'm so far away.
Yeah, now you fixed it. Yeah, now you fixed it.
All right, thanks. Thank you, Steve. Thomas.
Hello.
Welcome back.
Thank you. Nice to be here. I'm fine. Good.
Okay.
How are you?
I thought we'd start with the good news.
What is the good news?
That you're fine. And,
yeah,
they're good.
Yeah, and that's
and
about
now
it.
we can talk about the world.
Yeah, and that's about it then on the good news side.
What's top of mind for you?
I think we could start with the. Let me check. Where's the? So what's the thing with the?
Share screen.
Yeah, I do. I just try to find the.
It's at the bottom.
Yeah, I just started. That was not what I was looking for.
Oh, okay.
Yeah, just the.
Well, I mean, you're finally getting the bull move in metals that
Yeah.
you've been looking for. In dollar terms.
Yeah. Yeah.
Finally, in dollar terms, a peak in the dollar.
But you know what's been driving the gold prices down? What has been
paper manipulation?
Yeah, central banks have been selling it massively. The Western central banks. I saw there was a analysis. I don't know why. I think it's just manipulation. I think.
Okay.
Just for maybe I don't know, maybe to get the impression that things are not so bad or whatever. But the Western central banks
people say they do that through the paper market. They're not going out and selling physical gold. They're
probably not. No, yeah,
they're trying to keep it down with the derivatives. Is that what you're saying? Okay,
that's probably how. I haven't had the time to analyze it, but that's probably what I just saw a graph and a little explanation which shows that basically all the Western central banks are selling and China and Russia are buying.
Big time.
Big time, yeah, and it is like. All through history, basically, if you want to prepare for a crisis as a nation or as an individual, you buy gold. And Russia, China are buying gold, and we are, dumping it. I don't know.
Well, we're dumping our oil too. So
yeah, that's true. You're selling your diesel while you have a shortage.
Yeah,
which I don't.
So tell me, bank issues in Europe. Or
not now, but I think they are re-emerging. We have massive banking issues. We actually feared that there will be a banking crisis in Europe, which would start in October. We heard a pre-warning. Yeah, yeah,
What-
we did hear a pre-warning on the
Oh,
Credit
Credit
Suisse.
Suisse.
Yeah.
Credit Suisse.
And
Okay.
it was we received both the public and private channels, and it was really bad. And we actually issued our first ever banking crisis warning on the was it the 1st of October or something like that. And it was set for 2 weeks, and they got it done. Basically, I don't know what they did, but they dumped there's massive dollar swap from the Fed. I think something like 6 billion went to Swiss National Bank over during the October. So there was a massive liquidity support. Someone was drawing dollar assets in heavy volumes from Switzerland, and they're probably, people ran from the Credit Suisse and maybe the other Swiss lenders too. But we got really close, and then there was the near collapse of the pension funds of the UK.
Yeah, true.
And it was really crucial. It just, the report that came, I think it was 3 days after the Bank of England started the emergency purchases of gilts, stated that the fire sales of the pension funds when the Bank of England started the emergency purchases, I think it was around 11 or noon. The report stated that the pension funds would have been out of cash by around 3 to 4 o'clock. So we were about 3 to 4 hours away of another financial meltdown. It was really close call again. And many don't know this. It's funny, but yeah. Once again, the authorities saved us at the nick of time.
What's next? What's the next boiling pot that you see? And let me ask you, what's your view on the strength of the euro over the last month or so? Will that help with the inflation aspect of what
I
you're
don't
dealing
know.
with, or
I don't know.
harder?
The major thing here is now that winter has finally arrived in Europe this week. Oh, it will arrive according to the forecasts. So it's been extremely mild the October and November, or the beginning of November. And now it's turning. And now they start to burn through the gas storages. And now we will truly test within the next maybe 4 months how the global LNG market is able to cope with the demands of Europe. So it's we are at the turning point of some sort. So my prediction now is that we will see some turmoil again within few weeks. It may start from another energy shock. It may start from some banking issues come to light, or then it may start from some unpleasant developments in Ukraine.
A tactical nuke?
I don't think a nuke. I think Russia has been preparing for something major, because they have been bombing the electricity infrastructure for and what I learned from one of the Ukraine specialists is that the Ukraine has mostly only electricity run engines. They don't have diesel engines on the railroads. And if they got the power, the movement of troops becomes impossible.
Logistics.
Yeah, logistics, and I don't know, and the tone now from the Ukrainian leadership, I think they are starting to be rather worried what's coming. So now I hear there's the secret peace talks in Ankara, Turkey. So let's hope that something positive comes from there.
Okay.
But there are like several of these issues. We're not usually we have not usually forecasted the war, but now it's so crucial for the world economy. So we have to take a stand, kind of, or take our swing at it, if you may, and try to see what's coming.
Have you considered or informed your subscriber base about, besides gold being a hedge in this environment, that they could own grain contracts because production, regardless of the war, I've been reading it's going to be down another 30% next year.
We have already last spring, basically,
Okay.
so summer, but we have.
Do you have a silo at your house?
No, I've been, you know, pretty moribund about that I don't have a silo here, because if I would, it would be full of grain, for sure. Okay.
Yeah.
So, but I think the if we come to the financial world purely, I think this is the this is also the global development, but I think this is the most important figure at current time in the macro world. So this is the balance sheet of the Fed. Do you see this, by the way?
Yeah, the balance sheet.
Yeah. So, and it's declining. Now it's truly declining. So the quantity tightening has started.
Okay. All right. How big of a factor is China reopening or not reopening?
Well, I just heard that they are not really opening. That's the thing. And it was what?
People, I think, were trying to interpret that by the fact that when Xi met with President Biden, he wasn't wearing a mask. So that's a sign of reopening.
It could be.
Can you believe with all the straws people will grasp at?
But it has come to this. Like we really read the I don't know what was the word. But anyway, we really read these omen hotels. You know, is this so? It's going so crazy because politics is running stuff.
Yeah,
that's the thing. But the another figure I wanted to show.
Yeah,
is the you see the composition of global credit or liquidity?
Yeah, we do.
And there are some interesting things here. This is the global from the Bank of International Settlement. So global debt securities and global bank loans.
Okay.
And you see all these, like you see the 2008 crisis. There is a quite a hefty drop there. And then you see this is the European debt crisis, which is actually a banking crisis. Another question is,
what didn't take much of a dip.
Yeah, no, but this is global. So it's if this would be like the US or something, it would be much higher. But these are notable in a global sense. And the question is, now we're here. What is this?
Double dip.
Yeah, and this if the economy really would be growing, the global economy, this would be growing. But now we have only this, and this actually implies that we have been in a banking crisis since 2020, since this. And it has never really recovered. So that was kind of a find to me.
Interesting.
And this is, of course, the massive increase in the issuance of government debt. And these are like, and this is not a good development if you think about the global market liquidity, because this implies the banks are not lending, may not be a banking crisis, and this implies that the liquidity is coming from a outside regulated banking sources like governments and also the shadow banks again.
Yes. All right.
So, and this is first, if we consider that there is a banking crisis, it's not good. But the second one is that if we really have gone back into the shadow banking industry to get the lending and all that, it just means that they have taken bigger risks than before.
Unregulated.
The regulated banks, and they when the tide turns and the recession comes, global liquidity could just vanish. That's the thing. This is something. These very small movements here, they'll a big story. No one really has seen or understood. This is in my newsletter. It's I think 3 weeks ago I published this, and this was a massive finding. People don't get it, but we are if these like, yeah, these are drastic developments in the behind the kind of in the global plumbing of liquidity, if you may, something like that. So, and this implies dangerous things for the market in general. So,
all right. Okay, so
that's just a warning of a like the sudden collapse of the which could happen. That's the thing, and the thing is that we probably have been in global banking crisis since 2020. It's just been masked with different liquidity and all that operations from central banks and governments.
So what is it possible that the peak that we have in 10-year yields might be more about economic weakness, even
Yeah.
though they've come from better inflation news, and maybe the better inflation news is a sign of economic weakness vis-a-vis a weak dollar and lower yields?
Yeah, I think so. I think that's the case. And the thing is that the winter coming to Europe now, it will most likely create another like up hike or hike in the energy prices, and it will be global thing this time. And consider this: the sanction of the European Unions will go in force between I think the 7th of December and 22nd of February. It will cut a 1 million barrels per day of Russian Ural oil, light oil from the market, at 1.5 million barrels per day as some different refinery products. You have a diesel shortage in the US already, and even gasoline shortage is global. And these will come in effect during the peak months. And then there's of course, the natural gas. They will come in force in the worst time of the year. And, the energy market could go completely haywire within the next, let's say, 3 months, 3 to 4 months. And this is again a risk no one seems to really acknowledge. It's, I don't know.
Why is it?
I don't know.
Why aren't the markets discounting it?
I don't know. Maybe because only so few see it coming, and the futures market I think the futures market were seeing the trouble in September, October, but then there was the EU regulation and all that which talked them down.
Okay.
And now, and this is, I think there is also the possibility that the combination of all these sanctions and how they hit the entirety of the global raw energy market is something that it's too complicated to grasp at this point. It may be that too. I don't know.
What do you think about the UK talking about austerity?
Well, they have to.
But it's just talk, right?
It's just talk now. They have to talk about it, otherwise the bond market would go haywire again. Okay. But isn't it interesting that the gilt or the pound, they were the former safe havens.
Yeah,
like the Japanese
for
yen.
Europeans, yes.
For Europeans, of course there's a dollar, but they're like a former powerhouses of Great Britain and Japan, and suddenly they were not, until the central bank stepped in. It's
with your pedigree, why don't you explain to our community what is a sovereign debt crisis?
Sovereign debt crisis is a crisis where the government cannot afford to pay its lost the words. It's debt cost, the principal or the interest, or both. And it announces this publicly that it will not pay back some of the interest payments or some of the principal payments. And the debt crisis starts from there. Of course, every single foreign investor pulls back from that market, and basically country falls to the hands of the IMF support. That's how it goes.
Okay.
And this can happen.
I think they're ongoing right now, even though the bank BOE stepped in, that we still have a sovereign debt crisis in the UK.
Well, it's hidden again. I don't know, and it really depends. They have to talk about the austerity, otherwise it would be there. So everything is hidden now by the central bank liquidity, and actually this here, the blue line. Everything we have, problems in the financial sector, are hidden because of this massive credit issuance and quantitative easing and all that, which were going on. But now now they're turning back the tide. I was just thinking I should have one figure somewhere, which I could show actually. This is kind of the, oh yeah. Do you see this is the balance sheet of the, do you see this now?
No, I'm still on the global liquidity, credit liquidity
Okay,
chart.
then I have to change it here. Just give me a sec. That's no. Okay, how about now?
Nope. You may have to
Nope.
stop your share.
Yeah,
and then
I stop it
reshare.
and start again. So I stop it, yeah, and share it because this is quite interesting actually. You see it now? Bank of Japan. Yeah, okay. And this is actually my piece going to the Epoch Times next. But this is the combined balance sheet of Bank of Japan, European Central Bank, and the Fed running from January 2018 till the December of 2019. Okay. And if you remember, there was the market rout kind of began in early October into 2018
till he flipped.
Yeah, and this is the decline of the balance sheet of this, the combined balance sheet, and they really tried to put it down, but then the repo market implodes in mid-September and they turn it. And this was the pivot here. You know, the Fed stopped talking about hiking. And now, if you consider this is like the combined balance sheet is something of it talked about 14.4 billion. But now they are in the level of let me check just there. They're in the level of over 25 billion. So they are central banks are now trying to shrink their balance sheet from a level which is 10,000 billion higher than this. How do you think it will go?
Yeah, who's going to buy them?
I don't know, and it's going to draw the liquidity from the markets, the artificial liquidity, because credit quantitative easing it creates also, because from it the primary dealers actually buy the securities also from investors, and they get deposits, they get money from it, and now they're drawing it all back. And who is going to buy them? Yeah, and the liquidity is going to vanish. And something like this will definitely happen. That's basically guaranteed. And how long it will take, well, we'll see. But the thing is that when they started talking about this and raising rates, that's when the yields of gilt really shoot up, and it started the.
Well, they were the first to raise rates.
Yeah, they were the first. Yeah. And also the quantitative tightening. And the thing is, if you think about which institutions hold bonds, like government bonds, they are banks, they are pension funds, fixed income investors, and they have all come in under a really brutal hit. Yeah. And it will continue. And if you just look at, if you think about the crypto carnage, which is now going on, okay, there's the fraud, but it also implies that the massive leverage in the financial market has started to pull back, and it starts from the most speculative corner of the market, which is the crypto market. So this is a sign. Crypto market it's just a sign that the kind of the flood is going out, and we will see who is who has swam naked.
Right.
It's not a warning sign and just to do not invest in crypto now. It's a warning sign that the flood of central bank liquidity is going away, and it will just push everything down, which is not good.
Well, I mean, the size of debt markets compared to crypto is so huge that
of course.
The implications of the bond markets in a crisis compared to crypto is like 10.0 on the Richter scale.
No, yeah. And the other one is a major event.
Yeah.
So that's where we are. So there are a lot of like warning signs all over, which are kind of hidden.
So should we buy the S&P after hearing this?
Well, if you buy, just be ready to sell it when the shit hits the fan again.
Always ready.
Yeah.
And what do you think? $2,000 gold by the spring?
Could be, but it requires several things to happen. It requires that something really bad, like a Russian winter counter attack, energy market blowing up, and the massive quantitative tightening leading to some kind of collapse in the financial market. Then it will happen.
How about a continuation of the dollar crash, which it looks like a crash? What happened?
It does,
week.
but I haven't really. I don't know what's driving it. Actually, is it? It's difficult.
Interest rate differentials is the way the reporters are explaining it.
Yeah, that could be, but I think there is something else too.
Oh yeah, I mean the BOJ had to defend, and then
Yeah,
the Fed leaked an article, and that was it. And yields are turning, so.
Yeah, everybody's expecting that the inflation has died out and it will just be. But I don't. If you really
what do you think Powell's going to do in early December? We'll wrap it with that.
I think it's with the 50 basis point rise. It's a nod to the.
Okay.
But there's a twist here. If the energy crisis returns in Europe within the next few weeks, then he might reconsider. So I think everything depends now on what happens in Europe, in the energy sector, in the financial sector, and what happens in Ukraine. You need to watch those three because they will tell you what's coming next.
Is it true that Santa Claus can't find any coal? Tell people if that they were naughty. Thomas, he can't put any coal in my stocking this year.
I don't know. Could be.
I should have misbehaved more than I did then. Anyway.
No. It was a good one. Yeah.
All right.
Yeah.
All right, my bud, my friend. Thank you so much for showing these key charts about liquidity, etc. And
I want to say to all of your community, I wouldn't buy into this rally. I see this as a dead cat bounce.
Okay.
So that's my take, because the global recession is going to be here really soon.
Okay. All right. So
my final thought.
The further up it goes, the better the short.
Yeah.
And at MT Malanin is where you can follow Thomas. And your website address?
Yeah, there's actually it's my newsletter. It's at Substack. It's which I started to write again, and then there's jnseconomics.com, our firm.
Okay.
Both
all right. Well, thanks for being a watchman for us, buddy.
Thank you. Nice to be here.
All right. Great to talk to you. Thomas, everybody. Thank you very much. All right. You could join the team in about 17 minutes on the Morning Edge. Everyone have a good turnaround Tuesday. Don't just count your pips, count your blessings. And you're very welcome, Bhavana, Thomas. People are enjoying it. Laura enjoyed it. So thank you for edifying our community. All right, everyone. See you tomorrow. Good hunting.